Hey everybody, I'm just reopening up the room, so I'm here, but I'm not saying anything yet. This is a great day. Little iceberg right here. I don't know if you noticed him. He got filled and then he popped back up and he got filled again. Whoa, and there goes. Can't hear. Okay, that's good to know. It's showing me that the sound's running. Yeah. Okay. Well, that was interesting. We just watched a little iceberg get filled and then we pressed below it. So there's a pretty strong down bias now. Although it looked like it was going to try to hold the internals are not horrible, but they're getting worse. So, God, I'd love to just see a wicked down day today, like a 500 or a 700. It's not out of the question, you know. We are in trend down structure here. If you see a day like this, guys, where it just, on a 3-minute chart, there's, one attempt to consolidate that failed, there's a really good chance you're going to get a really solid trend day. Those are really rare, but we're back on this here, this time of day, we're starting to wonder if we're gonna get a trend day or a flip. I think a flip is unlikely, obviously, because we didn't have any big move overnight. We could get a high volume reversal down here. There's been a few tries at that haven't really gone anywhere. So this is a really good day to learn from. Yeah, we're going to take the lows out again here, and there, boom, there was 200 on the bid, and he just got sucked right up and filled. But it's holding his level right now. He's right there. Nope. So watch that as an inflection point right there in the NQ. I hope you understand by now why, heavy selling, light buying, buyers tried to support it and they failed. So that's what's going on right now. You guys hear me okay, right? I'm just babbling about the price action. Yeah, okay. I'm going to talk formally about what I'm seeing at 7:30 once we have the first hour. But this is still clearly a trend down here, guys. So, you want to be short or looking to re-enter short. You certainly don't want to be trying to be long here. You'll get crushed. Yeah, that little, God, he was way up here. That iceberg was up here and he got crushed. So far, everybody that's tried to buy with any significance has been crushed. So it will be interesting to see what it does going forward. I'm going to recap it all in a minute. I'm going to talk about the crew thing in just a minute. I'm just waiting for, I said this would start at 7:20, so I'm just waiting for that. And then we'll go over all the setup situation at 7:30. I traded a little bit between the two sessions. I'm not doing right now, although I may throw a few more on here. I have it on our little baby account, which I've been using for testing, so it's not representative anymore, but I will reset it with some more money and we'll start that up in a week or so. Okay, so we're selling right here. Watch this. So let's see. Okay, that's the most significant. There it is. Okay, when you see them start to come in like that, that's you just got to jump in and take the trade, and then go with it. So that's a nice 12 ticker, but see it's right back at that spot. So this spot here is interesting right now. They're kind of churning it around there. I'd identified this and this one. This is an old bigger one. So definitely want to be looking for a potential reversal or at least a seller trap, and the footprint for the ES is a much easier place to see that than on the footprint for the NQ. So yeah, there's a pretty good example. There's a bunch of sellers down here at 17 and they're still okay up at 20, but if it goes much farther away, you're probably going to see a spurt up. So, maybe up into this 24 area on ES. Indexes are pretty correlated right now. Here's an update on that. Remember we talked about that before the other, earlier this morning. I said if RTY was leading and if they can't catch up to it, they're going to turn, and that's exactly what happened. So that's why correlation is such an important thing to understand, and that's why you see this over here. It can definitely make the difference between a trade working or it not working. And you always want to be on the side of the trend and the flow and the correlation. So right now, you really want to be looking at shorts. I mean, there could be a good long setup here, but it's sort of risky. This is not a good spot to try to play the long. It's not extreme enough. If we get really stretched out, maybe there'll be a short trap long trade. There's a little one here, but it didn't get very far. See what I mean? Even if you were short there, maybe they got pushed into covering, but they didn't get very far away. So who knows? Anyway, just again, this is kind of what my brain does when I'm watching days like this. The bias is clearly the downside. We've tried to consolidate a couple of times and failed. So, here was one of them right there. This entire area is another one. We're just below it. So a potential for springing through here certainly exists. I'd watch like 25, maybe 20. If it gets up in there, a spring setup is real. So there's the POC. So, if it gets up here, you can even, kind of say, not sping, we need a spring, so that's a cool way to use that column, and just to remind yourself that you were thinking that when it was down here. And but clearly this is a short bias, obviously. I mean, it hasn't even tried to come up and test any of the volume yet. And the problem, what usually happens when you see an open like this, is it settles down, and then you really need to let the first hour identify itself. Because if we're going to get that reversal, I've posted this over and over in Slack, a very typical spot for it is going to be at the first hour high or low, right? So so we're kind of looking for this kind of thing, and I've shown you a lot of examples of them there. So there are also HV reversals, and again, those tend to occur at the same spots. So I don't know if I posted, yeah, there's a couple of them there. So so watch out for that. If there's a place for it to happen, it could certainly be down here. It could spring earlier than that, by the way. That's just kind of where a spring could get really violent, because it would kind of, this entire drop would then be challenged and the opening 5 low would be in play. And here it comes. God, it's like I predict the future. There's my spring, and it's coming up to me really fast. See, now look at this. See how there's entire gaps? Those are sweeps where it literally took a level. Here's 3 levels where it literally did not trade. The buyers just gobbled them up. So, if you don't want to get caught in those, but if you do, go to the sidelines, lick your wounds, and reassess. There's not much you can do. It happens. It happens more in the NQ than the ES because of the, it's a thinner trade. Okay, so see how now that's so important, because it's kind of like, okay, we got a spring and we got, some trap sellers down there. But, as I was saying earlier, if it gets past this spot, there's a whole lot more potential shorts in trouble than there were down there. Do you guys get that? Do you understand what I'm trying to teach you? Again, this is the topic of the workshop, how to migrate from looking at charts to the dome. And, and this particular setup right here is a really good way to do that, because you can kind of use the benefits of both the visualization tools of a chart and, the reality of the up-down world on the dome. And being able to mark those levels, I find to be really useful, particularly when you're new, because there's just so much going on in your head. Okay, here's another attempt to sell it right there. So let's watch that. That is another inflection point I'd identified earlier. So let's see if he gets filled. If he does he reset? That would be an iceberg. He disappeared. That's interesting. That was probably an algorithm trying to push that down. Okay. So it's almost 7:30. I want to talk about the first hour high and low at 7:30. But before I do that, I want to go back and review, remember I said there could be a really sweet short over here in oil? Well, guess what happened? I mean, you know, if you're going to trade oil, you need to focus on it, but it, you know, it had a similar kind of a move, and the consolidation at the opening five was really pronounced. And then, you know, it just sold out of that. So there was a bunch of, you know, up thrusts in there you could have shorted. So remember, you know, I'll post the recording, but that's what you want to do before the open, you know, like 5:30 to 6 my time, is kind of scope out those opportunities, because as your accounts get bigger, you know, you could have put on a one lotter over there and just let it work or not, you know, and that's the kind of thing that I do when I'm not, you know, doing webinars and whatnot. So really good education today. And gold is managing to hold the teens. So, you know, no trade there. There was a short in oil, it's over. Now, who knows? You know, yeah, there might be a long reversal, but never try to predict what oil's going to do. Just look at a potential setup and take it or don't. If you're going to try to trade oil, I think that's good advice. I don't know if Lee would agree with that. Is he here again? Yeah, he is. He's got some experience with oil too. All right, so I want to, reviewing, you know, what we were talking about in oil, we did that, kind of reviewing the open five, what happened over here. I've been doing that. Excuse me, I'm yawning. Sip of coffee. Now is the time of day where many people lose money because, let's see, is Blair here? Blair is not here. Blair, this is directed at you when you listen to the recording. You said you have trouble going short. And a lot of times people that have trouble going short will now try to put their shorts on after witnessing the open that we witnessed. And because you know, their bias is clear in their head. And what I'm warning you about today is, you know, this is a pretty radical move so far. If it's going to turn into a trend down day, you know, I'd like to see it test a bounce and then get crushed again. But I would be losing my short bias here, and trying to see if in fact we're just going to consolidate into the range, which is what usually happens. So, you know, this, by the way, this number here that's in red, I mentioned that this morning, that's a previous low, and you can see why that's so useful. We blasted through it, and it's, you know, way below the opening five low. So it's another little spot to watch here, you know, 35 over there on the ES. You know, so you could mark that. And interestingly, you know, the VWAP's just below it, but the volume is mostly below it too. So that would be a very interesting spot. And the NQ is just having a party here with the momentum in both directions. I actually caught a couple of longs, just, you know, just scalping H Momo. Okay, so I think that's a really good point to start to understand, you know, what I'm saying here about this transition. This is a really good time of the day to really think about that. So, you know, you want to look at the first hour high and low and kind of have that supersede or overlap the opening five high and low. So that's the kind of mentality we're going into now, and we're going into this kind of range thinking, and we're watching for a trend day or a high volume reversal within that range. That's kind of what's going on now. So, you know, you're the one lot trader with your little account. You're looking for the really asymmetric opportunities. What are those here? A reshort at a really good inflection point, like that one, or, you know, the one I mentioned up there. That's a good spot. A breakdown where, you know, it just hits through the lows and just keeps going again. Both of those are reasonable scenarios. But right now, you know, this is where the chart, the fast 30-second chart is really handy. Because like I said earlier this morning, it's kind of a way of putting the action into perspective. You know, we certainly are selling off again here in the NQ, but it's not blasting down the way it was. It's not testing the low yet. It's got some good momentum down, but, you know, this is where some buyers have caught it a few times. So, you know, the thing you should be trying to do now, making the transition to the dome, is understanding that this can add to your understanding of what you saw this morning, but you'll get a much more what's happening right now viewpoint here. So both are valuable. This is context, this is reality. As long as you don't start thinking that this is reality over here, it's not, it's context, okay? So, you know, and you can do whatever your choice of views here is. Depending on the action, the footprint can be useful. Like, you know, are they going to hold this point down here? Are we going to, you know, see a shift in the cum delta? You know, that might be a good place to get long, so you could kind of combine the two views in your head. And that's why I set them up this way. I can also switch instruments. I showed you guys this yesterday. I've got them linked together by color. So if I change this chart, it's going to change them across the board. And it does that pretty quickly. And now we're selling off again. So, you know, that allows me to bring oil up here if I want, you know, or whatever. And it's pretty instantaneous because I'm not asking for a lot of data. So gives me a lot of flexibility with what I'm seeing at any given second. And right now, you know, I'm kind of watching for this breakdown again. You know, there's the, okay, now we've got our first hour low setting up, and that's an error in my indicator. It should not have painted yet. The way you fix that is you check the little box that says hide until formed, and it should be, and it's already checked, so something's wrong there, whatever. It's a little early, but that's okay. Might just be that one time frame. I have some setting there that's wrong. Anywho, so let's go back to, oh, and again, you can see why I considered that to be so important. I was explaining this morning about using those previous highs and lows, is it just literally took it out. And you know, that's the same thing I was looking at over here. So, so again, the chart should support the setup that I'm looking for and not vice versa. So, you know, I'm looking for shorts here, but I'm watching for that first hour low to hold, and maybe we'll get along there. So there it is right there. So let's keep an eye on that, and maybe we'll stick a footprint up here so we can see what's going on. This is a pretty fast footprint, you know, 45 seconds, but it is giving me a pretty good idea of what's happening real time. You see what I'm saying? Like, you know, those sellers obviously got trapped, but you know, we're only a few ticks away. So strong down momentum in the cumulative delta. The bar by bar is, you know, kind of flattening out, like, you know, we saw it doing here, you know, so that all kind of goes together. So, you know, long's not out of the question here. So you don't want to get married to your idea it's a short. And remember, you know, that mark I made there about, boy, if we can get up to 20 in the NQ, we could get a wicked spring. And I'm kind of expecting that to happen. I'm kind of hoping it happens while I'm talking, so you guys can see it. So, you know, basically what it will be is, it will be, you know, like right here, you'll see this area get tested, which I have marked right there. And, you know, it won't be exact with the NQ. It could be 3-4 points around there, you know, so like this. But, you know, if it gets up there and holds like it did like right here, if it looks like that, and you get a weak pullback, you know, watch for it to just go and just blast out of there. I mean, that will be a perfect spring. So trade's about to happen. I mean, I have to, kudos to Weiss. I mean, he nailed the perfect title for his book. That literally is what springs and upthrusts are. And most white coffee and stuff is that. You're not predicting the future. You're letting the volume tell you what traders have to do. Do you guys understand that distinction? The reason a spring or an upthrust happens is because a significant enough number of people get on the wrong side of the trade and they get caught. And so boom, it happens. I mean, it's a self-fulfilling prophecy as long as, you know, the math works out on the setup. And by the way, Lee has a really cool little tool he's developing for this that we'll share with you in February. But it kind of basically counts the footprint for you, so you can kind of figure out at any given second how many people are potentially trapped, which is something I kind of do in my head, but I really like his implementation of it. So you'll see that more going forward. Okay, so we have our first hour, excuse me now. And this is something that's funky with Ninja. You know, I'm on 30 seconds and it's not showing me the first hour low, but it will paint it as soon as I refresh it. So I'll do the same thing kind of up here and we can watch it that way. All right, so there's, you can kind of see what's happening. This is a relatively low risk long under any other conditions. You know, it's a little bit too strong of a down move for me to consider that right now. But, you know, any indication that there's a good long scalp coming, you know, like that spring, and it's definitely worth taking that trade because it's so asymmetric. You know, I hope you all understand what I mean. It's just the potential reward is so much greater than the risk. So I think we have a potential trend down day here, but so, you know, that kind of invalidates that idea. But as long as we stay above the first hour low, we're in range and springs are likely to happen. Okay, so that's a good docism. As long as we stay within the first hour, we're likely to play the distance in here with a range day. That's just the way it works. On the other hand, if it breaks down, on more than a tick or two or, or so, then we could see continuation. Now, the internals, I talked about that also. If you look at this thing, internals. Okay, you never want to do that at the beginning of the day because it doesn't mean anything. The internals, there's some yo-yo furu on Twitter, pre-market, pre-open internals. And he quotes, he's got something he calls the pre-open internals. And I called him on that because internals by definition are what the market's doing during the regular trading session. So Mr. Furu, there's no such thing as pre-market internals, but there are people paying him for that wisdom. Anywho, so here's the internals today. This is the tick, and I kind of keep a cumulative tick, and that's not a big down day. This is just not that energetic. The low tick of the day is not that low, and we're not trending down. The same thing over here on the tick of the NASDAQ, which is what that is. I'm also looking at just advance versus decline, and that's trending down strongly, but it's not at trend down day level. Trend down day level for internals, the S&P, you'd want to see it minus 1,500 or better. So if it keeps heading that way, that supports the trend down theory. And same story, in the NASDAQ. The NASDAQ, 91 out of 100 issues are down. That's pretty much as down as it gets, So whenever I see that, I kind of want to drill down and see what's going on. Well, there's the NASDAQ. The big caps are getting sold off. This week you expect that. So, are they going to sell off more? Anybody's guess. It's like one place to look at that again is the volumetric bars, and we're just not seeing that. We're seeing the buyers in gold, which would go with a sell-off. But keep in mind, they haven't gotten over the high either. And on their range, it's pushing, it could happen. So yeah, the market internals and the kind of, cross intermarket analysis is supportive of a potential breakdown today, where it could get really wicked. We're kind of in that no man's zone of, we're not even down 1%. So, statistically, it doesn't mean much. But, could it be a down 4% day very quickly? Yeah, it could. Could it bounce back and work the range? That's the most likely thing to happen. You guys get that? Just purely based on statistics of the volume profile for this kind of behavior, as long as we don't take out the lows, the odds are overwhelming we're going to stay in here for the rest of the session. Okay, so that's kind of a recap of the first hour low and open 5 and the momentum. And today was a really good day to see how you can make a living trading with a tiny little account. If you just don't try to trade on the days where you're not getting good setups, and when you get a day like this, don't think about it, just get in there, get short. If you have trouble getting short, you need to figure out what that is. This is not a day to hesitate. If you hesitate, you'll get bad entries. I think most of that was obvious, but I'm repeating it because it's good educational material in my non-Furu voice. Okay, I have reviewed the open 5. I have reviewed the first hour high and low setup, and how you should kind of be taking a step back now into wait mode and looking for intraday swings as opposed to scalps. You could certainly be scalping too, but the setup of the day here is the big spring up, reversal off this bottom. And look at the volume when it tried to do that the first time and second time. It was pretty high. So that's what you're going to want to see in that spring for it to actually get any legs. We are setting it up though, the pullbacks are going lower and lower on the second chart. The minute chart is probably not showing it yet. That's why it's really important if you're going to play those to play one time frame. So here's a good time frame for playing springs and up thrust, the 1 minute on the NQ. Look at how heavy the selling was on the way down. And attempts to buy it got crushed, and that's not true anymore. Now the volume's drying up and we're getting some little baby higher high tests. You see, yeah, it's building a little bit of a double D. This is more of a P right now, Jerry, meaning all the volumes at the bottom. It could come back up. and end up building, the double D. But this is more, because of that big range extension down, it looks more like a P, where extension with a big bulge on it. The possibility is there for both, certainly. Okay, and again, what we're doing here is this. We're doing this, we're using the first hour high and low to give us more information than we had at the open. The open was pretty clear, get short. Now, not so clear. Now it's like, might be long here. Here's the POC, the VWAP's right here. The odds are we're just going to fill in and consolidate. So trying to scalp this will be difficult because it could just, chop around a little bit. And that's why it's always easier to do that at the open and the close and when there's high momentum than when it's working a range. I think you guys all pretty much get that now. All right. So that was just a review of the morning stuff and how to use these charts on one screen and how to trade with your one lot account and making the transition to seeing the patterns on the dome. You can let it build you little footprints to spring off of or little up thrusts. And it's doing it right now, actually. So I'm glad I said that. Look how tight this range has been while I've been talking. These are equivalent. And just look at what's setting up here. If it leaves this range, it's going to be violent because there's a lot of shorts that are going to have to cover, on the other hand, if it tries to leave this range and it gets sold into, like, for example, if it tries to spring here and the sellers just come in heavy, there's your perfect, reshort because you're shorting a really logical spot. So I think odds are you're probably going to get both. It'll probably overshoot this and do a spring and then come back and give you an up thrust. It's just my gut, but who knows? Okay, here it comes. There's our spot. But you see what I mean? It's building this beautiful, trend up volume profile for me. And you can see that, the buyers really want to get it there. And they have a strong incentive to. It will probably just fly through there. Okay, let's see. Here we go. Does Jeff have any clue what he's talking about? We will go down harder, up harder, both. There's my reminder to look at that. And there's the down hard. Oh, look at that one. Okay. I don't think the spring is done yet. I think it's going to give it another shot. Here it goes. Anyway, this would be fun to play both ways. You could have, once it really gets going, it probably will do it a little bit more violently than this. Remember 25 and 35 are the spots to watch on the ES. And then this one here on the NQ. And then the next one up is all the way up there at 65. So, it has a lot of room to spring and it looks like it's not doing it. Watch that delta. So here's a good opportunity to totally reset your footprint and let it build you one right there at that point. So if it's going to blow through it, it'll be pretty obvious. You'll see the buyers push up through that level and it will build a floor under it where the sellers tried to sell and they couldn't get it lower. That's what you're going to see if the sellers lose. If the sellers win, it'll just be the other way around. This floor right here that people sold into will hold and the buyers just will not be able to get above that. Between here and there, I'd say is a good little range to watch. Are you guys following me? Is this making sense? I mean, it's really silent over there in the chat. So either it's genius stuff or you're all asleep. Good, okay. Obviously it takes some time to learn how to see it the way I'm seeing it, but that's why I'm doing this, and you can always just, let the, refresh the momentums on either side. And so that's why I really like having, the momentum tail on this side of the total trade. So the current trades here, current trades here, it's really defining this range. See how that held again. So that little sell area, so far, the sellers are winning this. So our little spring spot is holding as a reshort. And the beauty of having this over here, I can go in real fast and I can watch for a spring here. So I can even go down to 15 seconds. There it is. Boom. Okay. Now that's the floor to watch right there. They got it by there and here it goes. Okay. Ooh, this is a really good education. It's not going with the kind of energy that I would expect. So this is probably not going to hold is my guess. But let's see if they can hold this as the floor, it probably has some room. So now let's watch that for the floor. So you can see, there are your little springs right there. You could have got long anywhere and, you'd be long from 05 or 10 or 15, you got a nice little long going. just, you know, don't get over, you know, don't let all the action here shake you out of what you're doing. You know, the trade's still working. You know, obviously I'm not in it, I'm talking about it. Okay, there was the last little pop you like to see. That often signals the end of a spring, or again, if that area holds, then it can build from there. So let's go ahead and, you know, we'll call that sun of spring. I'm just, you know, screwing around with jokes, but that built me a real nice little range, didn't it? You know, we got the spring from there. It did that, and then it kind of went, which is kind of the end of a spring. That's how they look. They kind of go into an area where the sellers kind of finally say, all right, you know, we'll re-enter there. Could be because it's the VWAP, could be because that's high volume, who knows? But, you know, if we take this back down to a little bit slower, we can kind of see what that looked like. See, so it's still, you know, it's still in spring mode here because this one is still holding. And now we have another floor we want to watch. If that one holds, you know, we could rock and roll and get back up in here easily. So, all right. Yeah, springs in the open 5. You know, again, if you guys just want to trade one thing and, you know, grow your account and, you know, the 10,000 practice kicks, you know, the Bruce Lee kind of thing, you know, don't fear a guy who knows 10,000 different kicks. Fear a guy who's practiced one kick 10,000 times, right? Open 5 momentum and the springs and up thrusts are perfect things to use that for. All right, I'm going to pause for questions. I'm going to go heat my coffee. When I come back, I will answer any questions that are posted in the chat. And then I'm going to talk about the Motley Crew and what it is. And for those of you that haven't heard about that yet. Okay, so I'll be back in 2 seconds. I'm just going to go nuke my coffee. Okay, he's back. And there isn't a single question. Wow. So either you guys just understand everything or you're all asleep. Okay. I am going to spend a couple of seconds just reviewing what the crew is. Lee and I met yesterday and talked and met virtually, obviously. And what we decided to do, I have a real strong desire not to become a guru, and I've had an educational business before in trading, you know, back in 2000, gosh, 19 years ago now. And I really love teaching, but I don't want to do all the administration. I've told you guys all this before. And so anyway, Lee and I kind of found a happy medium of how to go forward and kind of test the idea of, you know, a real strong group of people that are working their way up from different levels. And that's kind of the mentoring group idea that we had. And we also have some ideas for some other things. Like I said, Lee's developing some code. I'm developing some code. We're collaborating on some ideas for code. We think there's just a really neat opportunity to do a bunch of different things here. So what we decided to do was just continue with a private channel in Slack for a couple of months while we test some other ideas, Discord and whatnot. The channel's called the Motley Crew. You can see it here on my display. I think there's about 10 people already that have joined. It's $49 a month. And not being furu-y, we're not, you guys are the founders, any of you can join, but nobody else is invited. And we're going to continue working on what we're doing. The small one lot, small size trading, these instruments with these setups, and, maybe build some code around that, and, really try to, for you guys, get you guys the distance, to your trading for a living goals. And for Lee and I, Lee's building a business. He writes indicators. He's got all kinds of good stuff on his emoji site. Check it out. And I think that the medium, the middle where we intersect, is a really synergistic spot. So that's the idea. What we're committing to is that the two of us are going to do a session or two a week. So there'll be at least two if each of us only does one, but there could be four. And there'll always be at least kind of an opening session on Monday. Here's what's going on, like what I did today. Just here's the overview of the instruments. Might do that on Sunday also, we'll see. And then kind of a check-in, these will be like little 30-minute things, maybe on Wednesday or Thursday, or both. Again, Lee's gonna host them, I'm gonna host them. Other than that, it's gonna be fairly informal. We're gonna look toward opening some sort of channel where we can all talk live during the trading day. Discord might be that. We don't know. So for now, we're just, by the way, there's the spring has failed now, see? So now you're thinking short again, and here's your high volume node that's kind of your stop right there. So, stop 22.5 and be short. If you're gonna get a trend down day, your potential is to retest the lows. That's a real good asymmetric risk reward trade right there. I'm not telling you to take it, I'm just telling you that's a setup I see right now, somewhere right in there. Not to the tick, that's approximate. Okay, so back to the crew. And we really think it's a chance to get in on the ground floor of a unique community. Neither of us wants to do anything Furu-like. It's just we have no intention of having a room with 1,000 people paying, $49 a month, and none of that nonsense. We do want to figure out how to go forward beyond this, and that's why we're kind of committing to a 3-month schedule. Lee's on vacation on holiday for a couple of weeks, so he'll be back mid-January. So for January, we're going to just I'm going to start it off, and then he's going to join us, and then in February, we're going to do some more sessions and maybe test out some other technology, with the idea that by the end of March, we'll go to something a little more structured. In the meantime, I'm not doing anything with the Slack. The rest of it, I'm leaving it up. I'm going to go through and delete, extra messages and just chatter, so we stay below the limit. And if you want to join the Motleys, all you have to do is, I'm going to copy this over to the chat. This is a link to just a PayPal subscription, and that's all it is. You can do it. It's month to month. You can do it for a month and quit. We'll be just getting going, but it's on you guys. I don't have any preconceived notions, and Lee and I had some really, really good thoughts, and this made sense. And obviously to some of you it did also, because there's already 10 of you or so there. Whoa, did you guys just see that? That was a sweep. And that's the kind that can ruin your day if you're scalping. I hope you saw that. If not, go back and look at that in the recording. It took out about 10 ticks in the NQ, if I remember right. So yeah, look, if that takes you out of a trade, it's going to happen. Just, that's life. By the way, remember what I said, that short up there from 22.5 down, this area right here is now, pretty solid. If you want to call it resistance, we can do that. That's the way I would be thinking from here on out until it proves otherwise. Notice how, over here on the 1-minute chart for the NQ, and I'm sure it looks the same. We're building just a range down there that is pretty supportive if you look at the volume. The volume more fractured in ES. Interestingly, it's much more consistently at the lows, which makes sense with the fact that the NQ is selling off much stronger relatively in terms of advanced decline. It's literally almost the whole NQ that's down, whereas still more than half of the ES is not down. So again, I'm just kind of teaching you guys how you assess this stuff. See, if you look at the S&P, it's not nearly as ugly. There's all kinds of stuff that isn't quite as red. Oil, duh, that makes sense. So notice how intermarket analysis always makes sense. That's how Furus make money. They just package that crap and they sell it to people. People say, oh wow, yeah, he's right. It's like, well, of course he's right. That's the market. There's no secret there. You know? Okay, cool. You got that? All right. Well, watch it here. Protect your profits. Okay, so that's what the crew is all about, and if you click on that link, it brings up just one of these little subscription things, and that's the deal. And again, I try to get these things as close to free as possible. I think given that Lee and I are kind of co-hosting at least an event or two a week, for $50, $49 a month, it's costing you like $10 an event. So I know some of you have really strict budgets, and I'm not commenting on that, but it's good value for your trading dollar. That's the Furu voice. The other thing I want to mention is I want to get some good feedback and reviews. I've gotten a lot of it from you about the workshop. A bunch of you have asked me on behalf of friends and whatnot, if I'm going to do another workshop. The answer is no. For right now, I don't see it happening. It may be the end of next year, but it just took too much out of me to do that. Just a lot of time, and I love it, and I love you guys. I'm really enjoying this. I'm sad that it's ending, but I think we have a cool way to go forward for those of you that would like to. If you're not joining the crew, the other Slack will stay up for at least 3 more months. You just won't have the ability to see anything in the crew channel, and I'll probably lock it so there's no updating. You'll be able to watch the videos and all that, but there'll be nothing new added to it. Okay, so anyway. Those of you that do join, if you decide to, you're going to kind of get grandfathered into whatever Lee and I end up doing going forward. There might be, this might be like a little mastermind group that I work with, and I might occasionally guest host on Lee's site. He's got a real business, like I used to doing this. And so, I encourage you to check out his stuff. And there's a lot, like I said, there's a lot of complementary skills and experience here. He's going to be releasing a footprint for free for Ninja. He has some cool Sierra tools if you're a Sierra guy. He's already got some guys he's kind of collaborated with in the past. And so I think there's a neat opportunity for all of us to kind of figure out a way where we all fit, maybe not under that banner, but under, a subset of it or something. So in the meantime, see it? Oh, look at that. God, it's almost like I wrote the script. You see how it banged into my spot and then it just reversed literally to the tick. I mean, right there. So that's why I do that. You can really see cool intraday inflection points once you learn to read the dome. And, I hope you're starting to see that your chart should really be nothing more than a way of a visual aid to help you see patterns of the past that are hard to see on the dome if you weren't staring at it. And likewise, my meters are kind of that. But ultimately, you really shouldn't need the charts as you get better at this. And so, that's why I've got this set up the way I do. It's just, those go away and I've got my domes. And if I need a chart, I can pop it up. And otherwise, I'm all good. I'm focused in on the trading and life is good. Okay. Any questions about the crew? Any questions about today's topic? The recording is ready. In fact, just while I'm blabbing, wait, did I post it already for the first half? Yeah. Wait a minute. No, that's from Sunday. I didn't. Okay. I'll put it up in a minute, as well as this one as soon as it's ready. Any other questions, comments, chart, context, domes? Now your favorite mantra. Good. Good. That's process is really not nearly as hard as everyone thinks it as. If you go back to another chunk of process that I think is useful right now, it's this, okay? Warm yourself up, do some warm-up trades, go for a run, have coffee, whatever it is. Evaluate the context, just to put a sharp point on it, nothing else fucking matters, okay? Context is king. Now, once you've done that, what's of your setup library, and try to keep that down to the open 5 and momentum, and the first hour high and low. And if you do that, you'll look for those ace king quality trades, and where's your stop, and then get in there. And there's a really good example of that right here. Is I've got a really good short setup up there because I know exactly where my stop is. It's above there. Here would be a good spot, or here or here. But it's a no-brainer that the trade works or it doesn't. On the other hand, if I was entering that trade now, that's not ace king, because where's my stop? You know, remember, I thought it was all the way up here. So I'm chasing the trade. You know, the guy who was in it when it started already has 2 points of profits to protect him. So that's what ace king thinking means, John. And it's a way of just getting even more accurate with it, you know, with your mantra. And then always do the insanity check. You know, am I doing the same thing, trying to make it right? You know, am I fading trend day and going the other way? Because if I'm doing that, I need to stop doing that. And a good way to do that is just put a, you know, circuit breaker in your rhythmic feed, you know, so it just cuts you off if you, you know, lose more than a certain amount of money. And, you know, only add to your winners, journal quickly, like I showed you, you can do over there in Journalytics. Reset your brain and keep going and take lots of breaks. Trading on the dome, watching that action is really taxing on your brain. That's why you want to get rid of as many other things as you can. You want to minimize numbers. That's why my footprint charts only show deltas. You know, you're going to see some of Lee's stuff. He's got, you know, both sides, and, you know, not just the net. And that's a different way of looking at it. Again, I like to just get as few numbers in my face as possible. Part of that's being, you know, 59 years old. Part of it is, you know, even when I was 20, that was a good idea. And my brain works pretty fast. I think you could all agree to that. So, you know, if I'm telling you to whittle it down and your brain is slower than mine, then you should whittle it down more than I do. Okay? Anywho, so, you know, this is kind of the default setup like that. And, you know, with this guy down here on seconds, you can get a real good sense of the ebb and flow. You know, particularly if you really drill in there. I mean, 15 and 30 seconds, those are both pretty cool because you see little baby trends. Remember I said in a couple of sessions that the reason I like fast time frames is because the trends are the most pure. This trend right here is much purer than this trend is right here. Okay, so this is a clear downtrend, but right now the odds of this continuing, that's what pureness means, is much greater than the odds of this continuing. So they constantly tell you to use longer time frames, you know, zoom out. Yes, that's a true statement, but you should only do it for context. Don't let the idea of trend or direction, you know, marry you to a bias that truly is not there. We are not trend down right now anymore. We are consolidating. And pretty much every type of chart in existence will show you that if you let it. See, there it is on a fast volumetric. Here it is on a slow volumetric. Same story. This is not trend down, guys. This is consolidation. So learn to see that. Otherwise, you're going to get caught on the wrong side. All righty, let's put that back there, and we'll go back here. And I think I'm going to wrap it up. Excuse me. God, that went down the wrong way. Unless anybody has any other questions or comments. We have a session I just added to the schedule, which is Thursday. It's going to be the last formal session. It's on trading psychology and emotional management, particularly for the, you know, the baby account, the $3,000 account thinking. You know, what can you do and not do of the stuff I've shown you, given that you have $3,000 in there? You can't do some of the stuff I've done in range trades, you know, where you add to the range and you're asking for trouble. You're going to get crushed. So you need to really focus on the ace king, high momentum, open 5, springs and up thrusts. That's what you need to do. And that's what we're going to focus on the rest of the week and in that session. So let's zoom this out a little bit. And again, see, you know, if you go to the fastest time frames, you'll find the trends are the most pure. Look at this. So here's 30 seconds on the ES, total flat consolidation, right? Here's 30 seconds on the NQ. It's about the same now. So those two caught up with each other. So now let's see. Yeah. So this is I'd be watching for maybe, you know, the game they've played a few times where they rally into the close, but given that it's, you know, the end of the month, a lot of guys are closing out their books. Does everybody know what that means? That, you know, professional investment people have to close their books out at the end of the year? You get that, right? So that's a good reason to look for selling going into the next few days, because they'll square positions up. Not everybody will, but, you know, in general. So, you know, the bias last week, the week of Christmas, is always up. And then this week it's kind of, you know, flat down. That's just the seasonalness. And you can see that short trade is still working from that level we identified. So anywho, let's just do that. All right, if there aren't any other questions or comments, we'll wrap it. I'll post the recordings and we'll go from there. Have a good one, guys.